I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee, I think that was the classic then, hundreds and hundreds of pages. And I read that whole thing over and over again. I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way, but it didn't hurt that I had that background and everything. And I rejiggered my mind, and when I read the book, The Intelligent Investor, from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses. I'm a bright guy who's terribly interested in what he does. I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me. And you don't need to be a genius in what I do. That's the good thing about it. If I went into physics, a whole lot of other subjects, I'd be an also-ran. But I am in a game that you probably need 120 points of IQ, But 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
What do you need?
You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it, because I'll buy more. I try to keep my competitive spirit in a game where I can win. I do know this. When I want to do something, I always want to do it big. I put my whole net worth in City Service Preferred, $114.75. Right. And I've never, since that day, and March 11th, 1942, I have never had less than 80% of my money in American business. You can call them stocks.
Or equities.
But I see them as American business. I've owned a piece of American business, at least 80% at all times. I don't want to own anything else. I want to own a home and things my family wants and all that. But owning 5 homes doesn't mean anything to me, because I'm going to be happy in one home, and there's a certain amount of things that go wrong with everything. And if I got 2 homes, I know I've got more problems and I don't have more happiness.
What brings you the happiness?
What makes me happiest is what I'm doing. I enjoy 2 things about it. One, I know I'll win over time. That doesn't mean I'll beat everybody else or anything like that, but I'm in a game that's very, very, very easy if you have the right lessons in your mind about what you're buying. I'm not buying stocks. I'm buying pieces of overwhelmingly American business, and I'm happy when I'm doing it. I'm happier when stocks are going down, because I can buy more of them with the same amount of money. I'd be happy if I was a farmer. I'd want farmland to go down so I could buy more acreage. It just makes sense. I'll tell you the second thing I really like. I like being trusted by people. I would rather do what I do with partners than do it sitting in a room myself, even though I might make more money that way. Let's pretend there is no stock market. Let's say I had to buy these privately, like you buy a farm privately, like you buy an apartment house privately. They're investments. So you're looking to say, what can I do with money I've saved to put it away so I feel good about getting it back later under any circumstances, but not necessarily on a given moment. But if I have a farm, it's going to take me a while. But people would be so much better if they actually didn't have a stock market in terms of buying businesses. The United States economy, and it's very easy to look at the statistics on it. I mean, more people, a greater percentage of the American population is wealthy now, or having more income now than they've ever had. And if you look at whether Bank of America will give you their average deposit, I mean, you just look at the wealth that's out there. That doesn't mean everybody's wealthy, but it does mean relative to any other period of time. I mean, people have more money now They get mortgages at lower rates than they've ever gotten. So if they want to buy a house or something, right today, you live in an environment where the bottom 2% in terms of income in the United States, the bottom 5%, and for sure the top 1%, all live better than John D. Rockefeller was living when I was 6 years old. John D. Rockefeller was the richest man in the world. And today, you can get better medicine, better education, better entertainment, better transportation. You can do everything better than he could. It's astounding. That's in my lifetime. If he wanted to watch a football game, he still had to go there. And I can sit there with this big screen, and they keep showing me the replay, so that and explaining to me what happened and everything. And maybe everybody doesn't have a screen as big as mine, but damn near everybody has a screen or an iPhone or a computer or access to one. And they have access. When I was born, the dentist didn't use Novocaine.
So there has been progress, obviously.
Oh,
And nowhere more than in the United States.
there's no country that's done what our country's done. If you go back 3 of my lifetimes, you're looking at less than 1% of the world's population, closer to half of 1%, are sitting in this land. They don't work harder than people in all the rest of the world. I mean, in terms of hours of unpleasant labor, everybody's got hours of unpleasant labor in those days practically. They don't come laden with gold and, they are half of 1%. And they work the same hours, they got the same IQs. They may be a little self-selected in terms of enterprise, in terms of going across oceans and things. And fast forward a couple of lifetimes, and they've got 20% plus of all the bounty in the
Right. When he says cash is not a good investment, cash is not working for you, especially currently with the interest rate so low. So if you have cash in a bank account, I mean, right now it's earning 0.05%, and it's not making you any money. So that's one of the very first point. Obviously very important. Invest in productive assets. So when he says productive assets, you want to look at companies itself. And you're really actually buying a fraction of a company. And that's what buying into the stock market or buying one share into a stock company is. You're buying a micro share and you're buying into that business. You're an owner of that business. So make sure that the company itself is productive. I'm going to show you some key ways to figure that out. Stay out in your circle of competence. I mean, if you're, I don't know, he stays in bank stocks and he stays in financials and pharmaceuticals, and that's basically what he knows. And so he's always kind of stayed in those sorts of different stocks and companies. But for you in your stock competence, you have to figure out exactly what that is for yourself. What do you actually know and what you know to be true? And you are evaluating companies. So you are looking at what companies do. Do they have a good future, or are they falling off like the market? Like something like a Tesla is at the very top of the market. Now, that's not to say Tesla won't keep going up, but there's going to be companies like Ford and NIO and XPeng and GMC. They're going to start taking some of their market share from the EV electrical vehicle markets. And then play big and don't waste opportunity. So if you're going to go in and you're going to step off the bridge, step off the bridge. And the one thing I can tell you is time is always your key. But if we look at something called like the S&P 500, which is a group, and we'll talk about index funds and buying index funds. And we look at that, and it's going to give me a picture of it in a few seconds. But essentially, if you buy into an index fund, which is passive income, you will be buying into the top 500 companies in the stock market. It's a very good and safe, predictable way to make money. It is much safer because I will show you this. Let's go max over time. Over time, what do we see with the S&P 500? We see that over time, given enough time, this is 1984 to the present, it always goes up eventually. So time is on your side. Let's say you bought at 1420 and it fell all the way down to 841. Well, it went all the way back up to what, 15.30 at that point, you would have made money. But if you hold even longer, look at where your profits have gone to. So that's one thing that people talk about is profits over time. Time is your friend. Okay. And remember, our goal is to buy low and sell high, not sell high and buy low. I have a couple friends that love to buy stocks, and the minute the market panics, they sell their stocks. Oh, well, it's going down, we're crashing, everything's going to happen. No, give time, be patient, don't panic. Don't ever panic in the market. So those are some pretty good advices to begin with. Now we can look, and this is going to be a very important area. So I kind of want you to look at Yahoo Finance and see if you can't pull that up on your own computer at this particular time. So they're going to tell you right now, today is Sunday. So they're telling me what the market will open up at. It gives you basically the current projection of what prices are. So this is what's happening when we get to other markets. Remember, the United States and the NASDAQ and the U.S. Stock Exchange is not the only market. We have the Japanese market, we have Middle East market. There's many different markets throughout the world, so that when we're asleep, they're trading. So that's why sometimes in the middle of the night, you see what this forward-looking progress is. Now, the S&P 500, I explained, is top 500 stocks. The Dow is the top 30 stocks. The NASDAQ is an exchange with basically close to the next 2,000 stocks. And actually, Russell 2000 is the top 2,000 stocks. So if you want more specific to a little bit bigger, to a very broad range of buying into the market, these are called basically index funds, and they also can help you generate passive income. If I click this button, I get oil, gold, silver, and we get some commodities, and we can also get what they call fiat currency, or what is the European euro doing against the dollar. So, and you can invest in those as well if you want to. So let's look at oil, and we think oil prices might be going down. I'm sorry to tell you, it doesn't look like it. It looks like this is per barrel of oil. All right, gold seems to be going down or maintaining, and so does silver for the most part. So how do you actually use this to read companies? Let's go with a very easy company to look at. Let's go. Why I like Exxon? Well, I knew over a couple of years ago, especially when the market crashed, when we went to zero, that investing in oil was probably a good thing. So every time I go to the gas pump, I'm kind of celebrating, unlike most of you. All right, so we're going to look at this chart itself, and I'm going to go through to how to read this chart. This is the current stock price. This is what it's gone up in the last 24 hours. So it did go up $1.24. All right. This is after hours. If I wanted to buy it before the market opens, I'm going to have to pay $71.99. Okay, because it's currently trading. So we're going to look at, and we're going to go down here, and we're going to look at some key factors. This is what it opened. This is what the bidding is. This is the X. This is the 52 range. So we're very near the top at new all-time highs as far as the last year. All right, this is the volume, and this is telling you whether it's overvalued or undervalued. Now, overvalued means you're probably paying a little bit too much for the stock. Now, that does not mean necessarily that this stock will not continue to go up. If we've looked at the last month, look at what has happened. If you even bought this 1 month ago, it was at $61, and now it's at $71. So, I think that's about 15 to 18%. My math isn't all that good, but that's what you would have made in just since December 31st to the day. All right. So this is actually a stock view. It tells you and shows you at least a little graph of where the stock has been and where it's going. And I'm using these time frames up here to kind of change things. All right. This is telling you what the outlook for this stock is, that they're thinking in the short term, which is really 2 weeks to 6 weeks, I'd say around 30 days. They think it's going up. Bullish refers to a stock that you believe or they believe is on an uptrend that is going up and will continue to go up. So it says a bullish pattern detected. When it says bearish, they mean it's going down. So if we're in a bull market, it means most stocks are on their way up. And if we're in a bear market, it means they're going down. And there's been plenty of instances over the stock's history where, believe it or not, even though we've been kind of in a bull market for the last 13 years, that stocks actually do go down. All right,